Hi all, I'm Cullen Haynes, Director of Sales at CA Home Loans and Legal Home Loans. It's an absolute pleasure to be presenting Finance Live today. We've gone through a little bit of a rebrand because not only obviously do we have our mothership brand Legal Home Loans, but we have just launched on the 1st of May, CA Home Loans, loans tailored for accountants, actuaries and analysts, which we're thrilled about. And it's all going very well. So thank you so much for all your support. And because of that, not only obviously did we want to elevate through education on the finance side to the general audience, but also something particular for our valued elite accounting and finance professionals. So I wanted to bring on a very special guest in episode 36 today. Very dear to my heart. I work with him every day. He is none other than Robin Soares from Team CA Home Loans, been with the mother company for 3.5 years. And hand on heart, I can say probably one of the most knowledgeable brokers for accountants and finance professionals in the country. Could you please make very welcome the one, the only, Mr. Robin Soares. How are you, Robin?
Very, very well, Colin. Thank you so much for that kind introduction, my friend.
It's an absolute pleasure, mon ami. It's an absolute pleasure. And obviously, we are live, everyone. It is 4:48 Australian Eastern Daylight Time. So if you have any questions for this absolute behemoth, please put them in the comments because we are live now on TikTok, YouTube, LinkedIn, Facebook, Twitch. I get some odd ones from Twitch, the comments, but nonetheless, let's keep it professional on LinkedIn, which is my favorite. But Ben, what are you seeing in the market right now, sir?
Mate, it's a great question. The market has been doing some funny things as we've experienced over the last couple of years, especially we all saw rates moving from a historical low to a historical level of increase, and the frequency of the increases over the last few years was what really caught people off guard. It did make lending quite difficult, but there's a good news story to come out of that. The rates have sort of stabilized. The buying sentiment is back, and it's very important to know that there's still competitive options out there, and we always encourage all of our clients and to our new clients, in the financial services space, to reach out to your brokers and allow us, and give us the opportunity to review your facilities and explore options for additional lending, because those requirements are always going to be there from the client's perspective, and you need someone with professional knowledge, with professional experience to help guide those decisions for you.
It's well said there, Robin, I must say. And for those watching, obviously, we've had the budget just been released. 13 rate
Yep.
rises before with the RBA. So Robin is right. Like, there's been a change. There used to be record low lending where rates were 1.79, 1.89. Now we're in the mix of 6% plus. Some people are coming off their fixed rates and it's like 7.5. In terms of borrowing power, it's dropped by about 400,000. So if you could borrow $1 million and your income and expenses haven't changed, it's now 600,000. So it is a different lending landscape. If you got your pre-approval 2 or 3 years ago, it is important to get it refreshed. Take that 15 minutes to speak to a professional like Robin, because you'd rather have it, not need it, and need it, not have it. But nonetheless, I'm getting ahead of myself as always there, Robin. I want to talk about CA Home Loans, Chartered Accountant Home Loans, Australia's only mortgage broking service for accountants, analysts, and actuaries. Tell me, why CA Home Loans and why did we start it?
Mate, super, super exciting. Obviously, as you've touched on, we have the mothership brand at Legal Home Loans, which we're very proud of, and we're very, very proud of the amount of clients we've been able to assist and help in that legal fraternity. We now think it's time to extend that service out to another professional body. And yeah, again, super excited to work with the financial professionals, like you mentioned, your chartered accountants, actuaries, and financial analysts. So the reason why we work exclusively with professionals, and again specifically for financial professionals in this space, is because the benefits that they're able to access, that your everyday bank, your everyday broker is just literally not aware of. And unfortunately, we've had countless times where clients have reached out to us, and they found themselves in a pickle or predicament because of some poor advice potentially they've received from additional lender, a broker, for example. So just to touch on some of those benefits that accountants and professionals are eligible for. So it's a very, very simple process, honestly. As long as you're a member of the professional accounting body, and there are a number of those, you're able to borrow up to 90% of the property value with waived LMI. So just to touch on that a bit more, an everyday person such as myself and Cullen, unfortunately have
Civilians.
or can only borrow up to 80% of the property value before you start incurring something called LMI costs. So that's a premium charged through the bank's insurance on top of deposit and applicable stamp duty. That's additional to the loan. So already, as we know in Australia, property prices are quite astronomical at the moment. And it's just simply a lot of cash that you're going to have to outlay if you have to cover, the deposit stamps plus, that LMI premium. If we can negate that LMI premium entirely and borrow that extra 10%, your cash is going to stretch a lot further. You're typically able to enter the market a lot sooner, and that bodes really well. And because it's just so competitive in the market, if you're able to enter and get a foot in the door nice and early, especially a lot of the time it's first home buyers and things like that, it's a really, really beneficial policy. And off the back of that, we're still able to access 80% interest rates typically, so you're not penalized on the interest rate front for accessing that policy, which is another fantastic benefit. And we know the banks that do these things particularly well. These are the types of applications we call, our bread and butter. This is what we do every day. Again, a lot of clients aren't even aware of that policy off the bat, so it's always a really hardening conversation to have, with the client. And it's such a big benefit. Just the fact that there's a lack of awareness about it in the industry. Again, that was the whole reason, or a real driving force behind starting legal home loans initially, and now, say home loans. So, there's some great benefits there. And like I said, we're the ones who you want to talk to be able to deliver those products for you. Because it's a great one.
No, it's good points you make there, Robin. And what I am endeared by what you're saying is the waiver of that 10% or 90% no LMI policy on $1 million home. It's not peanuts. If you pay it and you don't get that waiver, it's $20,000, and it's exponential the more you lend. And in our legal work, putting our legal hats on, we've had clients before coming to us about to sign with their banker or broker simply because they didn't know that they could get it, or go with the bank that offers the product and still pay LMI. We had a client pay LMI 5 times, $100,000, when they didn't need to. You're an expert in what you do in your profession. That's why people come to you. Make sure you're dealing with an expert when it comes to your finance, because you're not buying a chocolate bar. This is, probably the single most important decision you make next to your partner. So you need to speak to an expert. Hence the reason why we're thrilled to start CA Home Loans. And because the professions are very different, but very similar in terms of their progression, time constraints, and it's a very similar route to partner level. You don't want to have to, do that yourself. You want to outsource that brain space. 15 minutes up front takes away 31 billable hours, or 31 hours that you would spend otherwise doing it yourself, and you'd rather outsource that. So 100%. That's the big news, right, Robin? That's what we released on the 1st of May, and it's already going gangbusters. But something topical I want to talk about that hasn't been getting much news, but it's still something we're seeing all the time. The fixed rate repayment cliff for those that are on 3-year fixed rates is happening now. And what I mean by that is, for anyone watching, if you're on a rate of 1.89 and 1.99, even 1.79, you know who you are. You're coming off June, July, August, September. Robin, what is happening with those clients? What are they seeing with their repayments? And what's the next steps for them? And what choices do they have?
It's a tough spot to be in, Cullen. Firstly, we always congratulate our clients. We say well done on fixing. Obviously, an extremely smart move. In hindsight, not everyone had that sort of forethought to fix just because the rates were so low. But those clients that did lock in, well done, and you really saved yourself, I guess, a lot of pain over the last 2 years. Unfortunately, good times have to end at some point. Fixed rates, like you mentioned, there is that sort of cliff. That's the big sort of buzzword at the moment, where clients are rolling off, those 2, 3, 4-year fixed terms onto a standard variable rate. It's very, very important to speak to a broker ASAP ahead of time, because what the banks are going to do is they're going to roll you off that fixed rate literally the next day onto their sort of standard headline variable rate, which can be anywhere from 7, 8. I've even seen 9%, before. Every single day that you are on that rate, you are paying more interest than you need to. And it's already going to be tough, your interest rate going up, 3, 4, 5 times, repayments are going to in turn increase by that amount as well. So it's hard if you haven't sort of budgeted for that increase. And the best advice I can give is, again, by speaking to your broker, you're going to ensure that you're refinancing or being repriced at your existing lender onto the most competitive terms possible. Rates are unfortunately on the higher end of the spectrum at the moment, but there's still, competitive rates out there, and you want to ensure that the terms that you're on are the best for you. And it's very, very different for each client. It's very hard for you to make that judgment yourself and call up. There's only so many banks you can call from your end. We have the systems, we have the people in place, we have the right contacts at the bank to know where to place each client specifically and ensure you're maximizing, your position. There's lots of factors in play: your property value, your loan balance, your own, financial position. A lot of our clients are very sophisticated in how they've structured, their financial position. So again, these are things that, we've built up over experience in dealing with, thousands of clients before. So we really know, what advice to give you, which lenders, are going to be the preference. So yeah, more important than ever to have that, that conversation with a professional, because it's such a key sort of juncture in your lending life, rolling off that fixed term. And it is a bit of a shock, and it is going to be for a lot of people.
And Robin, I don't want to go through the hassling of refinance. I want to give my bank the chance to, look after me. I've been a Dolomite. I've been with CBA for 30 years. Shouldn't they do something for me, Robin? Doesn't the bank care? What is your feedback to clients? Oh, someone trying to get in touch. I'll send that to the team. Sorry, everyone. In terms of, do you give your banks a chance? How do you do that? And what are the options?
Yeah, absolutely, mate. So look, it as a first step, we always do, like to give that existing lender an option, and repricing as a first step is the best goal. That strategy ensures at a minimum you're on that existing bank's most competitive rate when you do, for instance, roll off that fixed term. Having said that, as loyal as you may be, and as fantastic as the bank, potentially has been to you, at the end of the day, unfortunately, you are just a number to the bank. Our experience in general is that the banks do favor new to bank clients a lot for whatever reason. So they don't necessarily offer existing clients their best or most competitive rate. Having said that, that gives us options to refinance, and that's at that point, that's when you want to speak to a broker. If we can reprice you onto competitive terms at your existing land, and we don't need to refinance, we'll definitely give you that advice as well. So we're all about making sure your payments are minimized, you're on the best terms. So we'll give you that advice either way. But typically, like I said, because the banks are really, they're all about gaining market share and competing against each other. They're hell bent on bringing in as many new clients as possible, and we want to take advantage of that. We want to take advantage of the new, the best rates in the market, any cashback promotions, for instance, they offer, and the banks all structure their home loan products differently. So you may be paying, for instance, an annual fee at your current lender. There's banks that have sort of fee-free products. That you may have additional requirements in terms of offset, the banks who offer interest only, for example, and all these other features. So rates are always very important, especially in the current climate, but there's other things to consider. And again, these are decisions that will help you make and help guide you through. So you don't need to be on your own, and do lots of Google searches and reach out to banks. On your end, a lot of people don't have time to do that. Believe me, we have we have our own team under us that takes all that legwork out for you.
Very good. Well said there, Robin. We've already got some comments on Twitch. It looks like the ticker from Fox News. Unfortunately, we are not Fox News. We are elevating through educating, so we don't have any disinformation here. We just want to elevate people. I want to switch gears a little bit. I want to talk about RBA, Reserve Bank of Australia. what is happening over there and what are the plans for the future? Because I've heard that rates are going to go up, they're going to go down. Obviously,
Yeah.
our crystal ball is broken, Robin. What do we think? Explain what's happening in the RBA right now and what they're thinking.
Yeah, there's been some big changes. Cullen, I think they came under a lot of heat, a lot of flack for how they handled those rate rises. So there was an internal review or almost like an investigation into their conduct, and they did sort of switch, their process. So I think it's now almost like an independent RBA board, and they're not meeting as frequently. So they were doing monthly almost reviews of the cash rate. I think this they've extended out to 6 weeks. I believe now. So it's not as frequent throughout the year, which is hopefully good when historically they've just been increasing them. Um, the feedback, at least over the last 6 months, that cash rate has sort of plateaued. They haven't announced any increases, which is good. So it has allowed the rates to stabilize, and some banks have started to reduce their rates in turn. In terms of what we're predicting for the future, like you said, unfortunately, we don't have that ability just yet to predict that future element. But it was interesting to know there was an economist meeting sort of today where where they touched on there's potentially going to be a cash rate cut in November, which don't quote us on that. That's what we sort of heard today. And so it's very much we're sort of working off the announcements we receive and we go off. Having said that, with news that potentially rates are going to decrease in the latter half of the year, which we are keeping our fingers crossed for. I'm telling my clients this on a daily basis that that shouldn't drive your decision to, for instance, hold off on applying, to hold off on refinancing. Um, if rates decrease and for instance you're concerned about your borrowing capacity increasing as a result of that, it certainly will. But it's important to note everyone's borrowing capacity is going to increase, so not necessarily going to be in a better position to, for instance, buy a property or whatnot, because everyone's going to be in the same boat there. So I'm telling people, if you're ready, you've got a property on the horizon, or your fixed rate's expiring or whatnot, and you're not sure what to do, there's never a time, like the present, to reach out and get things moving. Because especially if you're refinancing or looking to purchase on a variable rate, you'll get that benefit in the future if the rates go down. That's the whole, basis and point of a variable rate. So don't worry if you're ready to go, reach out now, because while it's going to be great and make it easier for people with mortgages, if those rates come down, there's other ramifications sort of off that with everyone, like I said, with borrowing capacity increasing and things like that. So just something to be aware of.
Good points there, Robin. Good points. Now, I want to talk about the myth, because legal professionals are very wily, and I've heard this before. They go, Cullen, why should I use a broker, and why don't I just cut out the middleman and go direct to the bank? I hear that you guys, you charge more because I'm using a broker, or it's somehow hidden in the rate. Can we please dispel this rhetoric there, Robin, please?
Yeah, we can bust some myths for sure, mate. So a couple of the common questions we get, and fair enough. Do we charge for our service? Absolutely not. It's a fee-free service that we provide. How we get paid, which it's usually the follow-up question to that, is the banks pay us a commission on settlement. We're very upfront about that. Every single bank or lender on our panel pays us the same level of commission, so we're not sort of wedded to one lender over the other, aside from who we think is going to be best for you. And like I said, you'll never pay us a cent. We're very sort of transparent about that and upfront, which is great. There's not too many people offering services in any profession that's a sort of fee-free product for the client. So happy to sort of clarify that, if anyone has any questions. The other thing, I guess, on sort of cutting out, the middleman, I think you've already touched on, mate. It's very difficult to deal with the banks one-on-one. Believe me, the banks throw curveballs at you left and right, and it does take on average, 30 hours from start to finish to submit an application. And when you break that down, over a month or or 6 weeks, whatever it may be, the duration of an application. That is just such a substantial amount of time. Everyone's so busy at the moment, especially the professionals we deal with. The partners and whatnot, the self-employed clients, especially running a business and things like that. You just don't have that amount of time to deal with that, to sit on the hold with the banks. You probably won't necessarily know a lot of the questions they're asking for. Believe me, there's a lot of back and forth and internal discussion between us and the bank that we don't always pass on the clients just because of how silly and whatnot some of the requests are. So we really try and streamline that process for you. Like I said, you've obviously got a broker up the top, and we all have teams under us that are doing a lot of work in the background for you. So we're all about taking out that legwork for an application, and you can just get so much more done, through a broker and get some really fantastic outcomes that you might not necessarily have been able to source for yourself. So again, it's one of the great benefits of dealing with a broker and an expert in the industry.
No, good question, and well answered. Thanks for that, Robin. Now, in terms of a last couple of points, the process before we get into, I guess, a pre-approval and its benefits. A lot of people think that a home loan takes a long time to put in place and whatnot. Walk me through the process, start to finish. Someone engages with us, they have a 15-minute conversation with us. What's next, and how does that go?
Yeah, absolutely, mate. So we obviously have that preliminary discussion where the questions that we ask are, what you're looking to do, how can we help you, and at that point in time, we'll grab some high level figures from your financial position to help us take it offline. If you're applying for pre-approval, for example, run figures on borrowing capacity. If you're applying for refinancing, source the lender that's going to be best for you. We do that all anonymously, so there's no live credit checks. Your personal information stays with us, doesn't go to any of the banks directly, so you don't have to worry. That allows us then to come back to you. We call it a finance solution, which is essentially a quote outlining borrowing capacity, for example, or the best refinancing option. So our recommended lender, who we think is going to be best for your transaction. And the usual, loan amounts, indicative repayments, the features and fees associated with the loan. Once you're comfortable and given us the green light, to proceed, we'll let you know what supporting documents you need, which are quite standardized for the banks. It can be, we acknowledge it can be a bit of a punish sometimes to collate all of those, but the reason why we get everything upfront is again just making that process as streamlined as possible. We know,
Correct.
again, from my experience, what the banks are going to ask for, throughout the process. We try and take that out as much as possible. So once we do submit an application, it's a nice and easy process. Once the application is submitted, depending if you're PAYG, so on a salary or self-employed, the banks are, again, pretty quick, and they'll all, if something's more urgent, that'll dictate who we go with and whatnot. Typically for PAYG, they get assessed and approved in 2 to 3 days. Self-employed might be a week or so's time. And moving forward from that, the banks will issue formal loan documents for you to sign. You'll review those. A lot of the banks are doing electronic documents, now at the moment. So there's not that in-person needing to go to branch and whatnot. And once you've signed, it usually will settle after that. It's a nice and streamlined process, that as well. And typically, on average, we say a 4 to 6 week sort of time frame from lodge to settlement. So nice and realistic there. And if you're pre-approved, for example, you have that pre-approval window, which is 3 to 4 months to purchase a property. Once you do find that place, we've taken all the legwork out at the pre-approval stage. The bank won't need to reassess. We update the bank with the purchase details. We get a valuation done on the property, and the bank issues formal approval. So again, on both sort of types of application, it's a very, very streamlined and easy process from the client's perspective.
No, well answered there, Robin. And the last but certainly not least, pre-approval. How much does it cost, and do I need one?
The pre-approval costs nothing. It's a obligatory free type of application. The whole purpose and thought process behind organizing a pre-approval, like I just touched on, is the bank fully assesses your financial position as though you've already got a property there. The only difference is we're inputting a dummy or TBA address. rather than the correct address. Your borrowing capacity is locked in for 3 to 4 months, like I said, depending on the lender. And again, one of the benefits of that, especially with rates sort of fluctuating here and there, is that borrowing capacity is locked in for that pre-approval period. So if the rates go up, for example, and potentially your borrowing capacity has gone down, the bank will honor what they've pre-approved the loan at during that pre-approval process. A lot of times when making offers on property, you're going to get asked by the vendors, are you pre-approved? Are you not pre-approved? And believe me, we've seen the amount of times that makes a difference between whether you're able to get the property or not. Because if you're selling a property, if you're a vendor and you have a client on one side saying, I've got pre-approval from ANZ, for example, to a client who doesn't have any sort of finance agreement there, you tell me which one you would look to sell your home to. So that does make the difference there. It's a negotiation tool. You feel secure when making an offer. It's very, very hard. Believe me, you can't do borrowing capacity calculators in your head. So unless you've got that in writing from the bank, it's very, very difficult for you to budget and make appropriate offers. It can be risky and you can get yourself into trouble if you're putting offers in on properties without pre-approvals. There's a lot of risks involved there, and the deposit is just too big of an amount of money to put at risk if you're trying to make offers without finance. So please get your pre-approvals in if you're looking at properties, even if you're a quarter looking, half looking, whatever it may be. You want that backing from the bank there, so your finance is as secure as possible.
Well said there, Robin. And look, it brings us to the end of the stream. Any last minute thoughts or anything you want people or CAs, accountants, or anyone else watching to walk away with today, my friend? Illumined, as it were.
No, guys. I think as we touched on at the start, we're super excited to launch this new business. It's the most excited I've felt for work. Certainly, not that I wasn't before, but it's just really nice to and looking forward to assisting sort of a different scale of people as as we've already done so well with lawyers, and that's going to continue to thrive. We really want to focus on extending that out, exploring our reach and awareness about these products. And we've got a really good team headed up by yourself there, Cullen, that we're all pumped and keen to help these professionals self-actualize, as you say, and just so important, with rates, with the market. The market's doing some crazy things. We haven't seen mortgages and banks in the news, for example, as much as they have been historically. So yeah, just closing advice, speak to an expert, reach out to us. We really do want to help. And I'm sure we can make a difference for all your personal circumstances.
Absolutely. Inquiries at cahomeloans.com.au. Please get in touch. And Robin, thank you for the compliment. If to paraphrase Jim Rohn, you are the product of the 18 people you spend the most time with. And if that's true, I am definitely very, very lucky indeed. Now, I just want to make it clear for all our lawyers, barristers, partners watching, we still do love looking after you as well. We are just looking, obviously, after the legal market. And now we're looking after the accounting market, and we've got the staff, the skills to look after both of you remarkably well. So I just don't want any lawyers to feel like we've given up on you. We are still very much committed at Legal Home Loans. It's just we want to add value as much as we can to other aligned professionals. But thank you for anyone watching the stream today, those re-listening. Feel free to hit that bell, subscribe, and we'll be coming out with this later on the podcast as well. And Robin, thank you for tuning in and hosting with me today, my friend. It's been a pleasure.
Thanks so much, Colin. Yeah, definitely been a pleasure, mate.
Good man. See you all and have a wonderful Wednesday evening, everyone. Get home safely on your drive home.